Let's go on to our third lesson for this mentorship. It's going to be about previous days' highs and lows. Previous days' highs and lows. That will be the easiest draw on liquidity for you. Think about it. Every single day you can see the daily candle reaching for previous daily high or the previous daily low. This is the easiest liquidity pool in the market side. There is rarely a inside bar, as we call it, and we'll show you on the next chart how that looks like. But in bullish order flow, the market will always seek buy side liquidity above previous daily highs, and in bearish order flow, obviously the market will seek sell side liquidity below previous day's lows. Previous days highs and lows is one of the foundations to daily bias and the draw on liquidity. It's the easiest liquidity pool the market will attack almost every single day. So now let's look at this next chart. We've got a daily chart for GBPUSD. Now we can see a old daily low over here, or sell stops have been liquidated. So our higher time frame target has been hit over here. Now expanding higher and higher and higher. Let's look at all the candles in this chart. Do you see a candle which is an inside bar? I can show you one if I have to look for it. I think this one did not take out the high of the previous day, so this is what we call a inside bar. But look at all the other candles. Almost every candle takes out a previous daily high or a previous daily low. Over here it takes out the high and the low, which is indication for a reversal, but we'll cover that later. Over here we take out the low, over here we take out the low. Again over here both sides has been taken. This one takes the high, this one takes the high, this one takes the low, and so on. So 90% of all these candles takes out the previous daily high or low and will liquidate a daily liquidity pool. Now looking at after we rated those sell stops on the daily time frame, this daily low down here, what is the next target, right? We have an imbalance over here which could be repriced. Then we also have some relative equal highs up here, which is a good draw on liquidity. So now what do we wait for, right? How do we get there? And when do we engage on this? That's a topic for another section, but looking at all those previous daily highs and lows, that will be the easiest draw on liquidity. Outlining these highs over here, these are all buy stops, and remember we already took out this long-term low down here, right? So over here we've got this smart money reversal, and then look at every previous daily high, right? This previous daily high gets rated, easy. This one gets rated, creating a small wick on the bottom, going up, taking out this high, and then eventually we're breaking structure over here. So buy side liquidity pools are seemingly getting taken out, and we can assume bullish order flow is coming in. Now let's annotate a break of structure, right? Over here this was the last swing high in this down move, and it got taken out by this big bullish candle. Now this is significant because we already took out this old daily low, right? So remember that if this low was still intact, and let's say this candle and these candles just were slightly above here, you would still be you would still have to think about this low can be rated again, and then if we take out this high, we might just have a high resistance liquidity run, right? So this is important, this low getting rated before we break this structure, so we know there are no orders left on the sell side to return back into. Now with this displacement over here, what do we form? We have a daily fair value gap inside here after a break of structure, and again importantly this sell side rate down here. So this sets up a nice narrative to take buys, and order flow has changed to bullish instead of bearish. Again, outlining previous daily highs, right? Now we hit that discount array, which is a daily fair value gap after that break of structure. So we dip into that, and then we can look to target previous daily highs, right? So this low didn't get rated. We have an inside bar over here. So continuing up, taking out buy stops over here, taking out buy stops, previous daily high over here again, and again we've got this one over here. Now on a intraday chart, which is a 1 hour chart on the British pound against the US dollar, we have that break of structure right here, right, on the daily time frame, and then we have this blue box, which is that daily fair value gap. Again, think about these lows down here. Sell side liquidity has been raided. So after that break of structure, we can assume order flow is going into bullish order flow. So always outline your New York midnight lines, right? 12 a.m. EST, Monday, Tuesday, Wednesday, Thursday, Friday. Now we know where are we in the week, right? Also, Monday trades up, Tuesday trades up, but look at these highs, right? There are kind of relatively equal high, so it could be a buy side liquidity pool. So now we dip back into that daily fair value gap, which is a higher time frame discount array, right? So it makes sense if we break up structure from here. If we do so over here, we're breaking structure up here, rating this short-term low down here, back once again into that daily fair value gap. We also have a tiny little fair value gap down here, and then continue up, and then order flow is good to go into previous daily highs. So buy side liquidity pool over here, buy side liquidity pool over here, over here, over here, and eventually up here. So zooming in a little bit more, outlining that New York midnight price, right? Dipping below New York and reversing, going for previous daily highs. Again, this is key every time. If you trade below the daily or the New York midnight opening price, create a low of the day either in London session or with a New York reversal profile, we can expect previous daily highs to get rated every time. So if you are confident in your analysis that we are in the daily time frame bullish order flow, only look for those previous daily highs and always mark those out too on your chart. So I would say the most essential things to have on your chart is that vertical line to separate the days from 12 a.m. New York time. Draw out that New York midnight price line, and also previous daily highs and previous daily lows, as those are the easiest liquidity pools in the market. Now, how do these candles look like? Let's go to the next slide. Now we can see actually the daily candles look like this, and this is a very good indication we're still in bullish order flow, right? We've got slightly a bullish reversal candle over here, which we covered in the previous lesson with the power of 3, right? A little bit of a longer wick on the bottom, but closing out bullish after, importantly, hitting a daily fair value gap. Next day, also a buy day. Then we are in the next week, which is on Monday, also a buy day. And then you have to think about what time of the week you are in, obviously. But we still got a bearish candle, but order flow is still bullish, right? So you cannot have like 20 bullish candles in a row. There has to be some sort of a retracement or a slow move lower, and then you can have a bearish candle too. But remember, order flow is still bullish. We've got these nice highs over here, right? So even though this candle closed bullish, think about that liquidity pool, which is above market price, which is the previous daily high. Now we've got a daily chart on the DXY, or the US dollar currency index. This will be the scenario for a bearish order flow, which will target previous daily lows. Now there is a higher time frame array up here, a premium level which got hit. I assume this is a daily fair value gap going down lower and breaking structure down here. So we've got confirmed sell side of the curve incoming, right? So over here, every time we take out more buy side, so we take out previous daily highs again and again and again until we reach that higher time frame array, right? Now breaking structure lower and returning back into that daily fair value gap. So this is the same what happened on the bullish order flow, which we just covered, but this is on the sell side of the curve. So now we hit that bearish daily fair value gap, and we can see market is targeting every time this previous daily lows. Marking out your previous daily lows again, This one gets taken out, this one gets taken out. This last swing low after that break of structure gets taken out. Again, previous daily low, previous daily low, previous daily low. So very easy liquidity pool to get targeted when you are in bearish order flow. Let's look at this intraday chart, 1 hour chart again. Daily fair value gap, hit, higher time frame, right? Continuing in bearish order flow. Outline your previous daily lows every time. That's the liquidity pool. Trading lower during the week. This is a Friday. Let me outline this New York midnight open price, right? Every time we trade above it and then start to decline. Trade above it, start to decline. Over here, same situation. Trade above New York midnight price, decline. And it goes on and on until every time we take out these previous daily lows. I would say when Asia range is very large, right, then you don't necessarily have to trade above a New York midnight price. But over here, Asia range is every time is quite small and ideal to trade above New York midnight price. So how do the daily candles look like if we utilize this? Again, all bearish candles, right? So most importantly, do we hit a higher time frame array? Yes, we did, right? That daily fair value gap, that bearish daily fair value gap. And then we start to break structure lower, outlining the previous daily lows. Easy draw on liquidity, and all the daily candles will close bearish